Hi, good morning, everyone. Welcome to this Monday's morning call. So this is Yongkai here, the US equities analyst. Okay, I just want to go through. So last Tuesday, we first initiated a trading buy on this company, FNF Ventures Group. So we initiated at a price of $15.05, and we have a call offer trading buy. Alright, so this company it was first spun off from parent company on 30th June. So the stated intention is to monetize the portfolio of diverse businesses. So they have restaurants, they have automotive supplier, they also have IT, many IT software companies as well. Then the balance sheet is very strong, $100 million net cash. So as per the SEC filing, you can see they want to achieve superior financial performance, maximize and monetize the value of these assets, presumably in the next 2 to 3 years. In fact, in the last 2 months since it got spun off, they've already announced 2 corporate actions. One is to sell the 32% stake in Comdata for $302 million in the tax-free deal, even though they only carry the equity at what we estimated around $35 million. They also announced a distribution of their Remy International shares. They used to own 51%, but they are going to distribute these shares to the shareholders, and at the last Tuesday's price, it will be worth about $3.91 per share. So the chairman management has a very good track record as well. They've created a lot of shareholder value. If you have held the main parent company shares since 1998, you have enjoyed a 25% compounded growth in the last 16 years. Okay, you can see the revenue increased from $40 million to $15 billion, and that's not with too excessive shareholder dilution. So if you include the $3.91 per share, the distribution, as well as what we think a target price will be in the next 12 months, we are looking at a potential return of 23%. Thanks. Okay, so next I'll pass on to my colleague who will cover on SingPost.
Right, good morning everyone. This is Colin, the telco analyst, and today I'll be giving a more overview on SingPost, which we have initiated coverage last Friday. Right, this is a company snapshot of SingPost. Share price as of last closing price of last Friday was $1.75, and market cap is about roughly about 3.7 billion. Singapore dollars. For forward PE is roughly about 26 times, although that's higher than its other logistics competitors such as FedEx, DHL, but is still below its e-commerce peers such as Rakuten, which is whereby their PE is roughly about 29 to 30 times, right? Okay, so first on the company background, SingPost is the national postal service provider in Singapore, and it has regional operations in 13 countries with access to a global postal network that reaches out to over 220 territories. And SingPost is also the sole public postal licensee in Singapore, whereby it is conformed to a set of obligations, and it has certain exclusive rights over other postal operators in Singapore. It's listed on SGX main board since 2003, and mainly its business operations can be classified into 4 different segments, which are mail, logistics, retail, and e-commerce, and lastly property. Right. So on you see on the pie chart. The pie chart on the left gives a breakdown of its FY14's revenue, right, in terms of mail of its 3 business segments, whereby mail contributes the most to revenue, and the chart on the right shows the breakdown in its FY14 operating profit, whereby mail still contributes to the bulk of its operating profit, and followed by logistics and property. Okay, key challenges to that the SingPost business is actually facing is firstly global decline in the global mail volume, especially in the traditional mail, which is research has shown that is expected to decline about 1 to 4% annually. This is mainly due to the impact of e-substitution as companies now are less reliant on traditional mails and due to the emergence of emails. Also, SingPost faces rising cost pressures, and that has led to declining margins over the years, right? Other challenges will include competition and regulatory risk. Since 2007, the domestic postal market in Singapore has been liberalized, which has introduced competition. However, despite of that, SingPost still continues to operate as the sole public postal licensee. Right. Right. If on the current slide, this we give a kind of overview on its key subsidiaries and associates. Those that are highlighted in the red orange boxes were recent investments or acquisitions that were made within the last 3 years, right? Because the most notable one was the investment from Alibaba, which has invested over 300 million for a 10.4 stake in SingPost, and that will make them the second largest shareholder after Singtel, right? Alibaba mainly operates on a third-party platform model and operates three of China's largest online retail markets, which include Taobao.com, with a total gross merchandising volume of over 200 of roughly about 248 billion US dollars. So due to the business model, they will need to rely on third-party logistics, and hence there will be synergies between the Alibaba as well as SingPost regional logistics infrastructure, right? Currently, they are still in a initial stage of the discussions for the joint venture setup and on how to tap on e-commerce opportunities in Asia Pacific, and how they will manage this joint venture together, right? For current slide shows the overview on the business value chains on where SingPost is going to derive value from, right? If you look at the following chart, mainly how it works is that customers will mainly order from online stores, whereby at the back end, the orders will then have to be submitted to the third party logistics for fulfillment. So at the back end, this is where SingPost once is focusing to build its capabilities on, right? Mainly orders that will have to be shipped to the third party logistics, and you will need warehousing to stock up the goods for the fulfillment. So this is where SingPost subsidiary Quantum Solutions actually providing the warehouses for fulfillment, right? And also they have recently acquired Famous Holdings, which is focusing on freight forwarding transshipment. So this is the Famous Holdings focus on how to transport the goods after fulfillment to the destinating countries, right? And as well as last mile delivery, SingPost also focusing on improving their productivity and enhancing the quality of service in that last stage of delivering the goods to the customers, right? So some of the competitive advantages that SingPost will have over other e-commerce players is firstly international coverage, which they are able to support e-commerce logistics mainly in Asia Pacific, as well as Oceania, which includes Australia, New Zealand, and also their operation extends to the UK as well as the US. They are also able to tap on international postal channels to deliver goods to rural areas, usually not covered by other e-commerce companies. Typically goods that are below 2 kgs, where SingPost will then be able to tap on international postal channels. Otherwise, they will have to rely on their own logistic subsidiaries to deliver and transport the goods. Also, SingPost also provides front-end web services for online stores, so that they are able, through that, they're also able to offer end-to-end e-commerce solutions for major customers. Right, right now they have over 600 customers, and this includes Adidas, Canon, Philips, Toshiba, as well as J Runways, which are some of the notable brands in their customer base. Right, the e-commerce capabilities. SingPost is able to provide transportation through mainly in the areas of sea, air, and freight forwarding, as well as warehousing, and typically they also need to rely on their logistics partner to reach out to some of the logistics infrastructure to countries such as Indonesia and China, which they may not have a strong presence in. Right? On the e-fulfillment, mainly through its subsidiary Quantum Solutions, SingPost has warehouses in 13 regions in Asia Pacific as well as Australia and New Zealand. Right. So this also includes China, Japan, Singapore, and Hong Kong. These are some of the countries which are ranked among the top global retail e-commerce index, right? For known based on the size of their online market as well as the growth potential for e-commerce space, right? On the last mile delivery and return stage, SingPost is also investing into rolling out POP stations, which are 24/7 smart lockers, which allows customers to self-collect their parcels, as well as investing into new three-wheeler fleets with bigger storage capacity. So this will help to realize some cost savings, as they will mainly help to cut down on the delivery trips that SingPost, the postman in SingPost will have to make in delivering the goods, right? On the front end web services, right? SingPost currently helps to operate and design the web store for Adidas and some other customers, right? Also, they operate the Amigo online store, which has launched last December. So this offers over 7,000 products from 500 over brands. So this will mainly help to generate additional income for SingPost. Right. On the growth, right, on the e-commerce growth, right, worldwide e-commerce sales is estimated to grow at a growth rate of over 17% from 2012 to 2017, and is expected to exceed about 2.3 trillion US dollars, right? And the strongest growth will mainly come from Asia Pacific, whereby forecasted e-commerce sales expected to exceed 1 trillion in 2017. So some of the opportunities in Asia Pacific, whereby Singapore is able to capture, is mainly due to the lack of reliable last mile delivery providers, insufficient warehousing distribution centers, as well as different payment modes for among the various countries. So this through all these opportunities, Singapore is looking to capture the growth potential by providing one regional logistics infrastructure and able to provide a complete end-to-end e-commerce solutions, right? Right. So okay, next on the investment merits on why would you want to invest in SingPost. Firstly, it's mainly for its stable operating and free cash flows. Is mainly due to its traditionally defensive and non-cyclical business. So hence that allows SingPost to generate a rather stable free cash flows. And it also gives consistent dividends based on current share price. The dividend yield is currently about 3.6%. Also, we do see there will be a potential boost to its property asset, which will mainly to the flagship building, Singapore Post Center, which is located next to the Paya Lebar MRT station. So we do see that this will SingPost will benefit from the ongoing developments in Paya Lebar area to be one of the next major commercial hubs that's outside the city center, which was revealed in sometime in 2008 in the URA master development plan. So we think that this will likely boost its rental yields and increases the income from rental for SingPost, right? Also, SingPost is trending on a strong growth demand trend in e-commerce, right? And with Singapore as position as Southeast Asia's business hub, we do think that Singapore is well positioned to capture the growth and capitalizing on its infrastructure. Right, so mainly this will help to boost the top line revenue across its three segments, mainly the mail, logistics, and retail. Right. Also on recent news, on recent announcement of its postage rate revision, this will new rates will kick in from 1st of October 2014. This do note that this was the rate. The last rate increase was sometime in 8 years ago. So with the new rates, there will roughly be about 12 to 20% hike in domestic rates, and and for the international rates, there will be a 10 to 30% hike in that. Do note that this will mainly affect the regulated mail business, which is accounts for roughly about 60% of the domestic mail, as well as 30% of its international mail business. We, based on the management guidance, we think they have shared that the annual impact from this rates revision will roughly about will come to about 16 million in the top line revenue. However, due to rebates and free stamp booklets which SingPost will be issuing in the first year to mitigate the rate revision, right, the actual annualized impact will come to roughly about 12 million, right. So with the rate revision, this will help to fund the 100 million investment which SingPost is committed to enhance their service quality and productivity. Right now, SingPost is into its second year of investment, right, and this will include mainly the 45 million investment into its new mail sorting integrated machine, which will help to sort out the mail faster and hence will enhance the mail delivery process, extension of delivery days to Saturday, right, as well as investment in more pop stations, as well as the new three-wheeler fleets that roughly has 35% more storage as compared to the previous fleet. Right, so now we'll come to mainly on the financials of SingPost, right. If you just look at the charts in the top row, right, this mainly shows e-commerce contributions to its revenue, right, which roughly makes up about 26% of the top line based on the last fiscal year, right. Overseas revenue contribution, mainly from its Quantum Solutions and Famous Holdings, contributes over 27% of the top line. Right. And the chart in the middle left roughly shows the operating margins that's broken down by business segments, though that margins have been declining over the years, but in the last year it seemingly has kind of stabilized at the current level. So that's pointing a good sign of, and hopefully SingPost will be able to reverse this trend through continuous investment in these enhanced productivity and service quality. Right. SingPost also is in the pink of financial health with a high healthy level of net debt, and net debt over EBITDA makes up about 0.7 times. Right. Recently, they have also repaid about 300 million worth of bonds, right, and this actually helps to improve their leverage, right. On our financial forecast, right, this present our growth, revenue growth forecast, as well as forecast on earnings growth, right. Revenue will mainly grow at roughly 5 to 10% in the next 2 years, and with earnings in the mid-digit range. However, this do note that this is not including any potential growth that may be coming from the joint venture with Alibaba, as the details from this JV is not out yet, and also due to the dilution effect that arises from the share placement to Alibaba, that will help actually mute some of the growth in earnings per share. Right, so we come to the end of this presentation. First, to summarize on its investment merits. Firstly, for SingPost, the investment merits will be its stable operating and free cash flows, potential boost to major property assets, especially which will benefit from developments in Paya Lebar area, strong growth opportunity from e-commerce in Asia Pacific, whereby the company is well positioned to capture the growth, as well as further growth and synergy potential from its strategic collaboration with Alibaba Group. Some of the risk factors will include continued decline in profit margins due to inflation, decline in traditional mail volumes, as well as impact from ongoing investments, which will contribute to higher depreciation and amortization expenses. And due to the cyclical business nature of e-commerce, we do think that the SingPost is gradually shifting towards a cyclical stock nature. So this may actually lose appeal to investors looking for defensive stock during economic downturns. Potential catalysts that we think will move up the price will be likely coming from further deals and collaborations, extending of SingPost regional logistic capabilities into South Korea. This is one country which has a large and promising e-commerce online market, whereby SingPost does not have a presence in yet, right? And also any signs of improvement in profit margins will also help to boost up the share price, in our opinion, right? For our recommendations, we are recommending a buy with a target price of $2.07, derived based on DCF model with a 2% terminal growth assumptions. And this, based on current share price, right, this roughly translates to about 20% upside in share price, including a 3.6% dividend yield, right? So now we come to the Q&A. Right. Question on what's the projected growth rate of domestic air versus the logistics. Okay, we only provide the growth rate on the overall revenue. This is because e-commerce actually does not contribute only to logistic business, but it also contributes to the mail business. For goods that's actually below 2 kg, that actually comes under the mail business, because SingPost is then able to tap on its international postal network to transport the goods. For goods that's actually exceeding 2 kg, then SingPost will have to rely on its logistic subsidiaries to transport the goods. So hence, we see that these e-commerce growth opportunities will actually contribute to the overall revenue, right? And hence, we do not provide the growth rates over its different business. For more details, you can actually check out on our report, which we have published last Friday. All right. Right. Our target $2.07 target price is based on the 12 months outlook. Right. Question on why the revenue breakdown has no property segment, whereas operating profit from property actually constitute 8%. This is due to how SingPost actually report its financials, because property is not considered its core business. Hence, it does not contribute any to the top line. Also, due to all its operating expenses are also assigned to mainly its other 3 business segments, which is its mail, logistic, as well as retail. So hence, property only contributes to the operating profit. Right. Question on why on SingPost, why are we bullish, especially when the chairman of SingPost has sold his direct holdings last week, right? Mainly we are pricing our on SingPost mainly due to its potential, and as we do see that SingPost has very good opportunities to capture more growth from e-commerce, and there may be further deals and collaborations with major e-commerce players as SingPost mainly has a wide regional logistics infrastructure, which we do think that there's hardly any players in Asia Pacific which may be able to compete with them. Right, question on how much of the business from e-commerce is classified under domestic mail. Unfortunately, SingPost does not provide the breakdown in this aspect. It has only given the e-commerce contribution to the overall revenue.
Hello, there's a question on whether the iShare ETF A50 is an effective way to play the China AH share arbitrage. I would say that the ETF A50 consists of majorly because for ETF that proxy Shanghai shares, the Shanghai Composite index doesn't really consist of all the A shares. Most of the A shares are in Shenzhen index, so A50 would be a good proxy for the AH share arbitrage. So yes.
Hello, there's a question on any latest news update on the OSIM share. From what we see, as you can also see in the SGX release, since the last report on the issuance of the convertible bonds, OSIM has not provided any new updates on this issue anymore. So. But from what we see is that actually for the bonds convertible, because they are able to actually get it, actually issue the bond at a very attractive rate as compared even to the previous round. So actually on the whole, we feel that they are actually locking in a good rates for preparation for future acquisition should there be any. Thanks.
Hi, there's questions on Valuetronics. Okay, so the Valuetronics had an extremely steep run-up. So in extremely steep run-ups, sometimes it's quite common for there to be very heavy profit taking. Okay, so that partly explains why the price came down. And also the other reason why the price came down was that it has two major big business segments, one of which is expanding at 30% growth year on year. That's the industrial commercial electronics. But for the consumer electronics, basically it was a bit stagnant and I think declined a little bit. So Kenneth is not around to comment on his coverage of Valuetronics, but let me try and fill you guys in. So basically, in the consumer electronics side, it's they manufacture Philip LEDs. Okay. Now there's quite a lot of China imitations coming out, so Philip is experiencing price pressures on its product, and that's why the consumer electronics side for Valuetronics was mildly contractionary. However, we feel that investors are focusing too much on the negatives because the overwhelming positive is that industrial commercial electronics, which is more than half of profit, is growing at a 30% year-on-year rate. So I think if the consumer electronics part, even if that undergoes a mild decline, I think on the IC part, we're still going to see some sort of earnings growth, albeit not as spectacular as people once thought. Anyway, Kenneth's earnings forecast is pretty much flat, so he's flat for the year going forward as he's trying to be conservative. But even then, the stock is extremely cheap with half the market cap now in net cash position, which means that it's trading at a ex-cash valuation of 3.5 times PE thereabouts, and at almost 8% yield. Okay, so if you want to go in now at the low 40s, I think it's still a very good bet. Okay, what's the firm view on gold? Actually, gold has completely it's a difficult animal to predict. But kind of like 2 years back, we were calling people to sell gold. Basically, there's not much reason to hold it. Okay, because in this low interest rate environment, low inflationary environment, actually it's Goldilocks for stocks. And I think a lot of money is flowing to the stock market. And I think the reason to hold gold is a lot less. Also, the macro risk in terms of well, people like to hold gold when there's a lot of macro risk, and that has diminished quite a bit over the years with the Eurozone crisis winding down, and also the US economy improving. And also with an improving US economy, it's bullish for the dollar, and that tends to be bearish for gold.
Someone inquired on how to purchase the ETF on A50 from Poems. Actually, you can go to the Poems unit trust website at www.poems.com.sg/unit-trust. From there, right, you can see from the right-hand panel, there's a list on UT Research Lab. You can go to the latest regional macro China report, and there will be a list of ETFs that proxy China. There are actually 5 ETFs, and then you can just click on the hyperlink on the respective share classes that you wish to purchase.
Hi, there's a question relating SingPost on the dropping margins and whether there's anything that can improve it. Right. If you look at the our report, mainly there's a chart that shows the margin over the last 12 quarters. Mainly margins have actually stabilized in the last 5 financial quarters, and what will improve it? Management is aware of this declining margins, and they are actually focusing on improving managing the costs, especially in the last mile delivery part of the whole business value chains. So hence they're actually investing mainly in the new fleet, 3-wheeler fleeters, which with bigger storage capacity, as well as the pop station rollout. So hopefully this will actually help to translate to less delivery trips that the postman will have to make, and this will actually help to manage all the costs. Also, on its 45 million investment in its new integrated mail sorting machine, this will actually replace its 26 existing machines which were operating over 15 years. So hence we think that this will actually will help bring down some of the expenses, mainly on the depreciation expenses side as well. Right. So that's all for today's webinar. Right. So thank you for listening, and do look forward to our next webinar, same time on Monday next week. Right. Thank you.